Hi, everyone. I'm Karen Webster, and thanks for joining me today. Let's start our conversation with a little pop quiz. So, which country had the highest digital engagement in 2023 from a list of 11 that includes the US, the UK, the 5 largest EU economies, France, Italy, Spain, Germany, and the Netherlands, to Asia Pacific countries, Japan and Singapore, and one LATAM country, Brazil? Now, unless you guessed Brazil, you'd be wrong. Yes, Brazil, the only developing economy on that list, but just one of the many surprising, perhaps even shocking insights from a landmark study of the digital behaviors of 67,000 consumers in those 11 countries, representing 817 million people and roughly half of the global GDP. Now, this study was conducted quarterly in 2023 by Payments Intelligence and released on June 24th, just a couple of weeks ago. Now, we've been doing this study each year since 2021, but 2023 was the report we were most anxious to see. Now, that was the first full year that consumers everywhere re-entered the physical world, giving us a chance to see how they use digital to conduct 40 core activities: how they pay, bank, shop, live, work, have fun, stay well, communicate, travel, and eat, whether buying groceries to eat at home or out at restaurants. Today's conversation will discuss what these findings mean for the here and the now of the digital transformation, and more important, what business leaders and innovators can do to pull more consumers across every generation into the digital economy. I'm going to do that with a panel of experts who bring firsthand knowledge of the country culture and dynamics and the economic impact of going digital. Odilon Almeida, Managing Principal, AJ Holdings, and Operating Partner, Advent International; Cyril Shish, CEO and co-founder, Lydia Solutions; David Evans, economist and chairman of Market Platform Dynamics, who designed the study methodology analytic framework and served as its senior economic advisor; and Ruben Salazar, the president of TerraPay. Thanks, guys, for taking the time.
Thank you.
You guys are ready? All right, I'm ready. I'm ready. And Odilon and Ruben, I'm going to start with you because obviously we have to start with Brazil. So as I mentioned, Brazil topped the charts with the most digital activity days per month of any country in the study, averaging about 12 a day. Now, each of you bring firsthand knowledge of the Brazilian country, its people, and its culture. And you were only surprised that we were surprised that Brazil topped the chart for digital engagement. Ruben, I'll start with you. Why weren't you surprised?
Well, we are not surprised because we have been observing how the public and the private sector in Brazil have been creating these conditions for more consumers to participate in the digital economy. It didn't happen over time, but consistently, Brazil has been eliminating the barriers of entry for more participants in their ecosystem. Today, the country contributes to about 45% of the fintech revenues in the region. Wow. And you have impressive household names like Nubank and e-banks that are becoming global benchmarks. Very early in the game, they also recognize that the digital economy and participating in digital is driven by a complex value chain, where payments and money movements are playing a crucial role. So the implementation of efficient payment systems like Pix is allowing them to bring more participants to engage in the digital marketplace. And as defined in the study, every aspect of the digital economy at some point requires payments or money movement. And based on your findings, there is a correlation between non-cash payments and the adoptions of digital activities. And in the case of Brazil, the introduction of Pix is creating the conditions for more sellers and more buyers to participate. It's like suddenly you are lighting up millions of new sellers that didn't have any practical connectivity to the digital world. And in many ways, Pix is the enabler for this impressive digital adoption in the country. Of course, the country did have some large penetration of mobile infrastructure, close to 80% penetration. But the gig economy, content creators, gaming, streaming services like Netflix or marketplaces like Mercado Libre, all of them need efficient payment infrastructure. So PICs along the card system that exists in the country today are the backbone of this digital adoption in Brazil today.
Odilon, I want to dig into PIX because when you and I chatted about this result last week, I sort of shared my opinion that PIX was in fact a catalyst because it did bring in 2020 when it was introduced about 78 million more Brazilian consumers into the digital economy with a pretty important use case, sending and receiving money. Your thoughts on the importance of PIX in really driving the digital adoption that we see there?
Yeah, just to give a little bit of background, I was the former CEO of ACI Worldwide, right, which is the global leader in technology for banks. And so I'm very aware of the technology of different banks around the globe and the financial systems. And I can tell you that there are two countries that are more advanced than the others, and one is India and the other one is Brazil. And Brazil comes because of hyperinflation. There was no other way. You need to have technology when you're living hyperinflation. So we're talking about 40, 50 years ago, when Brazil said to itself, you need to be developed with technology. And that comes from that, all the digital influence and everything that Ruben was talking about, from that history of hyperinflation. When you talk about PIX or UPI in India, that's the same thing, Karen. It's like those are the two countries most developed in real-time payments around the globe today. And again, it's not by chance. It's by design. It was driven by the central bank in India. It was driven by the central bank in Brazil, and they built the whole scheme, and they made compulsory for the banks to join. Again, we can do that because of that history. The central banks in those countries, they know they need to make it compulsory, all those breakthroughs in economy. So you look at PIX today and you look at UPI today in India, you can choose, and you can see the amount of digitalization that it brought to the country. And no question about that. PIX was one, but Open Bank was another one. Ruben was talking about the new bank. New bank would not exist without opening bank. And again, that was mandatory by the central bank. So you put all of those revolutions together, the stack in India, the open bank in Brazil, real-time payments in both places, and you have this high level of digitalization.
Odilon and Ruben, were either of you surprised at the velocity of the digital adoption of PIX?
Not at all. I believe when you develop a great user experience and the networks are efficient, the consumers are demanding this type of solution. So the adoption is driven by great connection and the great quality of service. We saw that happen in UPI, and we are seeing the same happening in PIX in Brazil.
David, I want to turn the conversation to you because sticking with Brazil, the more interesting findings is that older members of the population are also engaged, which is unlike many other countries on the list that we studied. There are many, many boomers and Gen Z who are almost as engaged as Gen Z and millennials. Question for you, how important is getting older members of the population engaged in moving digital transformation more broadly forward in countries?
So I think it's super important. So if you think about what drives digital productivity and coming up with innovations and so forth, it's people at companies, managers at companies, trying to drive the adoption of digital solutions. It's managers and executives at companies, trying to really think about whether they're at the cutting edge of digital innovation and what they ought to be thinking about and so forth. And so many of those managers nowadays are basically Gen X or younger baby boomers. And those are the two categories that we're finding across most of the countries are the least digitally engaged, are engaging in the fewest activities. And the divide between those two generations and millennials and Gen Zs on the other hand, it's absolutely stark. So I think a big importance, a major importance older workers older people being more digitally engaged is at the managerial level. Those are the people that are really driving a lot of decisions at companies. And it's not just the managers. So if you think about the workforce, to get productivity improvements adopted within companies, to be able to roll things out across an organization, it requires having a workforce that is adept at these kinds of things. And if you have a workforce that is not accustomed to using digital, then that's going to slow things down. While younger workers are obviously Gen Zs and millennials, an awful lot of the workforce and the more senior people at companies are going to be people from again the younger baby boom generation, but in particular the Gen Xs. So I think those differences are very important and influential in driving productivity differences across countries, and also the dynamics of innovation.
I was also going to say the economic impacts must be also considered, because if you adopt these technologies inside of businesses become more productive. There's obviously a positive economic impact for businesses and also the economy more broadly in those countries.
That's right. And if you take a look at how the different countries stack up, I mean, it is interesting that Germany, which has had relatively slow productivity growth, but is yet one of the largest economies in the world, is the country that, next to Japan, is the least digitally engaged. So digital engagement, I think, is very important for improvements in productivity and innovation in all these countries. And being a laggard is not a good thing.
Cyril, I'm going to turn the conversation to you. France. There's a lot going on in France right now. We're not going to go there, but we are going to go there with respect to digital engagement of the population. So here's the dichotomy. Despite being Europe's second largest economy, France scored below the median of the 11 we studied for overall digital engagement of the population, except for Gen Zs, which shattered all other Gen Z participation in every other country, 465 digital activity days per month. We'll get to what that means in just a minute. What's your theory as to why?
Well, we discussed Brazil and how it leapfrogged from a fintech perspective and from technology. And one of the reasons was indeed that the existing system was not that good, and that it required that leapfrog. Lydia has been founded like 13 years ago, inspired by what was happening in Kenya with M-Pesa, where people were unbanked, where people didn't have no smartphone. But I mean, the vast majority of the population were paying with their phones with that system called M-Pesa. And to this day, I believe it's still one of the most developed payment system in the world in terms of percentage of the population. So when the incumbent system is poor, and when you have a new technology like mobile, and even more so like mobile internet, all of a sudden you create the condition for the adoption by the younger population. And the bigger the younger population, the faster the adoption. The reason why I believe you see like India and Brazil being on top of these curve is especially because of that. Mm-hmm. Now, if we look into France, the thing is that, again, we have, if we take banking, for example, a very strong, very oligopolistic, very limited number of big banking group. System is here, it's working, people are used to it from in families for 12 generation, people told you should do banking here. It's difficult to change habits.
Sure.
But the younger you are, the more things you do with your smartphone,
sure.
And the more also you want to create different with the older generation. So you wouldn't use the same social network. For example, if you ask people that are 16 or 19 or 22 years old, they'd say Facebook's for boomers, but and they definitely wouldn't use it. And all this create a situation where it becomes a generation question. We were lucky to have that force driving the Lydia brand and making Lydia a verb like Venmo in the US in the peer-to-peer payment. But that's exactly what happened. It started on university campuses, and then it spread like wildfires because these are very small and viral community where you want to be like your peers. You don't want to be an outlier or not that much. And therefore, the network effect runs very fast. And I believe that's one of the reasons why, because a few companies, and because France had been lucky to have a very strong digital policy and over the last 10 years, that created a lot of companies that addressed that younger generation. And of course, in turn, they made that #1 ranking for digital use.
That's what I was going to ask. Has that become a cornerstone, that generation, that engagement by that generational cohort, has that become a foundation for innovation? So innovators see the engagement, they're inspired to develop other apps. Probably you're looking at that as an opportunity to add different features and functions within the app itself, since you see such heavy engagement, and commerce is obviously a big part of driving that digital behavior.
Sure, big time. And if you look at the aspiration of that younger generation, what they want to be when they finish university, for example, 20 years ago, they all wanted to work for top consulting firms and the big luxury brands that we have in France. No, they all want to be tech entrepreneurs. And these big institutions are actually have trouble recruiting this generation.
Interesting.
So really, the adoption creates the opportunity creates adoption. It's a virtuous circle of, because you start using stuff, you understand how you can improve them. And since it's such a exciting moment for entrepreneurship and opportunities, also offered by a combination of a lot of funding and new technology made available from mobile internet to AI, of course, you'd see that generation jump into these opportunities and create, so many more companies than we did when we were their age.
Yeah, and Macron's been very supportive of innovation in the country. Although I have to say, Chanel does sound like a pretty nice place to work. That's just me. Let's
to work or to shop.
Well, definitely the latter. I can't speak to the former.
Probably both. Probably both.
But anyway,
I don't know.
Let's talk now about activities that seem to be common. As I mentioned, we looked at 40 core activities, and we grouped them in pillars of similar types of activities. 3 of those pillars, groups of activities, have high digital engagement across all 11 countries that we studied. Maybe not surprisingly, have fun, which consists of music and video streaming and gaming. Communicate, probably also not surprising, which consists of using mobile devices to send and receive messages. And be well, but the one activity in particular being virtual therapy, which is constant, as I said, in terms of engagement across all 11 countries. Ruben, I'm going to kick it back to you. Do you have a theory as to why that might be? Is it they've been around longer, so the user experiences are better? Maybe they're free. Maybe people are stressed out. Maybe they're tuned out. What's your theory?
No, my reflection after reading the report is that these behaviors are probably driven by 2 main factors. The first one is the impressive penetration of the mobile devices across all these 11 markets. that is facilitating the consumption of digital content almost anywhere and anytime, no? Your news, your podcast, your favorite sport, your fitness app, your calendar, you name it. I mean, the mobile device is indispensable to run your business and your everyday life, and why not to relax as well? No? I'm very heavy user of Calm almost every day. That's
Really?
the first app that I have open, no? And I believe the introduction of more AI driven apps will accelerate this phenomenon that we call device dependency, no?
Mm-hmm.
And the second one is exactly what Cyril was mentioning, is generational. Millennials and J's are a group of consumers who are always connected. They are demanding everything in real time, and the developers community knows about these traits, and they continue to create these amazing apps that we didn't know we need them until we start using them. And so the adoption of these three digital activities consistently across these 11 markets, I also believe it is an indication, a very real indication of how we are all transitioning between our physical and our digital life during the day. And these behaviors are here to stay. I think we are just at the very beginning. AI will continue to transform this dependency.
Yeah, it's multitasking using digital devices. You can do many things while doing one thing in particular. Odilon and Cyril, I want to bring the conversation back to you, because one aspect of at least streaming and communicating is that people have gotten used to the experiences. The user experiences have been improved, so they're easier to use. There are more things that can be done using those apps. But then there's online and mobile banking, which has been around for a while. Obviously, that's a key driver of digital engagement in Brazil, as we chatted about, and in France with younger generations, but not so much in other countries, including the US. Do you have a theory as to that, Odilon? I'll start with you.
Yeah, I have seen that around the globe, right? I mean, the regulatory framework is everything in this sense.
Mm-hmm.
So why it's not by coincidence again. You get India, you get Middle East, you have Malaysia, you have UK, Brazil, and it was highly driven by regulators. So they say real-time payments, all the banks you need, it's compulsory. By this time, you need to be connected to the scam. Open bank, they regulate on that, and they say, you know, after this amount of time, in this period, all the banks will need to adhere. If you get to those places, those revolutions happen very fast. When you get to US, it's very hard to the Fed to do that. ACI worldwide, we are like part of the board on the Fed now. And, you know, the interest is on that. I mean, from banks and everybody else, the Fed now, I would not say it's powerless, but I would say does not have the will to go to the banks and say, by this time, everybody will need to be a Fed now. They just say, you join whenever you want. And that's basically how it works. And so in US, for example, I think it's going to be highly driven. This revolution will be highly driven by the merchants. I don't know if you have seen that, Karen, but I cannot pay anything in my home anymore to the service people if I don't use Zelle. If I use my credit card now, they charge a 1, 2, 3%, and it's already happening in the United States. And it's going to happen more and more until Walmart and all of those big merchants are going to say, you know what, I'm going to start to overcharge, and it's coming. And then that will be accelerated by the merchants, not by the regulators, and the regulators will enter that wave. But I think the one common thing is those revolutions, and again, you can talk about the stack in India, UPI, all of those things happen highly driven by regulators. And when the regulator does not make it compulsory, takes more time. Everybody defends its own interest.
Yeah, it's interesting because a lot of billers now do charge or give a discount for paying with your bank account. They're not surcharging, but they're providing a discount or some sort of reward for preferring a non-card method of payment. Cyril, what's your theory?
Well, first of all, let me jump back to Ruben's answer. It reminded me of something my son, who is now 18 years old, but it was like 4 or 5 years ago. he came to me and said, "Dad, how did you do to set up meeting with your friend when you were young, since you didn't have a smartphone?" So
Fair question. Fair
I-
question.
Back in the Stone Age.
I reminded him that romance actually met between friends. And it was a long time before smartphones, but it's that built-in core to everyone's daily life today, so that young people, I mean, they don't even understand how it was feasible, doable without it. So it's really that, I mean, I know how to do it without a smartphone.
It's
It
a
was
lot of friction.
inconceivable. Yeah. There was a lot of friction, a lot of meeting. We know that could have been if this meeting hadn't been missed. But to go back to banking, I believe that everywhere where incumbent banks, don't have enough of a competitive pressure by alternative player, and whether that's coming thanks to regulation openings or to any other situation, they won't move. They won't move because today, if you look at the multiple in terms of valuation of banking, it's already a pretty bad sector to be in.
Right.
But one of the key reasons why they keep on having decent valuation despite that poor multiple is because they've been distributing a ton of dividends year after year after year after year. So these are basically dividend stocks. Now, if you really want to transform yourself, and that means serve customer better, adopt new technology, not only does it cost a lot, it also comes with a social cost. You'll have to fire a lot of people. And finally, it will cut down revenues. So in the end, you end up in a situation where you won't be able to distribute that much, that amount of dividends. But if they do that, honestly, it's a disaster. Stock will be even at lower valuation. And that valuation is also a very important element in terms of legal ratio and regulatory ratio. So, this is a balance that, when you mention all these digital activity that are, all these activities that are massively digital, and you mentioned culture like music and stuff like that, all these industries have been disrupted, not because someone came up with a better product at a better price. No, this was a consequence. The reason why such people can come up with new, better product, simple experience, and cheaper price is because the cost structure of this player is radically cheaper, but like in a factor of 1 to 50 or 1 to 100. And because you have such a different cost structure, then you can come up with these new product, better product, cheaper price, and also because you haven't been distributed any dividend, so nobody's expecting you would do in the short term. So you can actually invest in that, and you end up in a situation where, well, the difference between the offerings is so big that then the competitive pressure I was mentioning at the beginning start to happen, and then incumbent banks adapt.
But there's also competitive pressure, but there's also pressure from the younger generations that just don't want the services and capabilities of, the traditional players in many of these countries. So, perhaps there is, the business model that these banks operate in a particular way, but the younger generation is going to force a change or force the development of alternatives to take the business.
Let me give you an example. In France, banks, although it's legal since 2004, have never been paying interest on deposits. Okay, it's 0%. The amount of deposits sitting on French individuals' checking accounts, it's 550 billion euros.
Wow.
It's a lot. If you multiply this by 4% or 3.75%, which has been the average deposit interest rate of the ECB over the last 12 months, we're talking 21 billion margin. Okay.
Wow.
And I haven't heard of any Gen Z, millennial, or anyone going in the street demonstrating to get their share of that. Because that's how the market is. And it's
Right.
not like you have a choice or not to have a bank account. So you have to, no matter if you don't think it's right, until someone does it. And we just launched a new offer, and there's a customer area that actually pay interest on deposit up to 4%, but on checking accounts. But until someone does it, it was not anyone. I mean,
yeah, there
say,
was
okay,
no
if you don't
there
share
was no
with me,
reason to change because there was no other alternative. Yeah.
But I think that's the beauty of competition that Cyril just talked about. For example, in Brazil, the same thing. The neobanks don't charge any monthly rate, right? Any monthly fee, and then the other banks are stopping charging the monthly fees because the young generation, again, they are looking at that and say, why should I pay a monthly fee? If the neobanks don't charge that, and that's going to happen more and more, right?
Interesting. David, I want to raise a different point, which is, particularly in the have fun and communicate pillars and others, where you do have this tremendous number of eyeballs who are fixated on content or communicating or whatever the case may be. And there's this opportunity to monetize those eyeballs in different ways, perhaps because they haven't been presented with an opportunity to transact and develop commerce opportunities or whatever. But I think there's an economic opportunity to monetize the attention of those eyeballs. Do you agree?
Well, I mean, so there's always an opportunity to monetize eyeballs in different ways. I mean, it turns out that the ad-supported model has turned out pretty well in terms of making money for a lot of for a lot of companies. I'm going to maybe be a politician and change the question maybe just a little.
Oh no, this is political season.
Just to kind of react to some of the comments that have been made. So as Karen knows, I'm an economist, which means I'm a dismal scientist. So I always see things, the glass is half empty, not half full. I think one of the things that one of the big takeaways from this study is across so many of these pillars, how many people, or a large fraction of the population, are really not engaged at all. So if you take mobile banking, so about 30% across these countries are not engaged in mobile or online banking at all. If you add in the people that aren't really doing it, very much over the space of the month, you're talking about half of the population.
Right.
And I take the point that we have Gen Zs that are engaged, and there's all this excitement and so forth. But these are all developed countries that have been doing this for a long time, where most people have mobile devices at this point. But that's an important activity, mobile banking, which is still not adopted by a lot of people. And you look at some of the other activities like what people do at home in terms of connected devices and so forth. Something like 75% of people are not engaged in that activity at all. So, as I look at this thing, I don't think, as I look at where things are now, I don't think so much in terms of how do I monetize attention. I mean, to me, the really interesting observation from the study is how many opportunities there are really for digital entrepreneurs to, first of all, come up with better ways of engaging people. So why are people not using voice-activated devices at home? Well, my conjecture is probably because they're not very good. But there are a lot of opportunities now with AI where that's going to change, and that activity will improve quite a bit. I think you have the same situation with telehealth, which seems like it's something that ought to be used by people. It makes a lot of sense that that would be successful, but it hasn't been yet because people haven't, come up with the right business model for doing that. And maybe part of this is a regulatory situation as well. So I look at this, and to me, the lesson for entrepreneurs and businesses is there's tremendous opportunity at this point to come up with improvements in activities, even like mobile banking, that are just not used enough by people, and to improve lots of the activities that people are not currently engaged in very much. And just one other observation on the report. Karen has focused on these 40 activities, but the study actually put forward 70 activities, and 30 of them were dropped from the study because there wasn't enough engagement across most countries to really make any sense to report on them. So I think someone made this point earlier on. We're really at a very early stage in the digital transformation. A lot of opportunities for improving what we currently already have, but also lots of opportunities to come up with new things. So I look at this and I see lots of opportunities. Maybe that's monetizing attention with transactions and so forth. But I suspect that more of it is just improving and perfecting these business models.
Yeah, I mean, if you look at the overall progress, if you want to measure it that way, of total digital activity days, everyone doing all 40 activities every day, which of course is unrealistic, we're about 23% share of those total digital activity days. So we do have, to your point, a lot of room for improvement. As we wrap, this has been a fascinating conversation. I want to talk about the things that can or will slow progress, and the things that could make our progress moving forward in a more digital fashion faster. We've talked a lot about regulation. We've talked about infrastructure. Those are certainly things that can get in the way, also opportunities for improvement. But if you do look at these three big sectors or four big sectors that remain more or less analog today, and they have the potential to be more digital, like banking, like payments, still a lot of a cash economy around the world, shopping, where still a tiny fraction is done online, healthcare, an enormous segment where digital can be so transformative for people, for the economic well-being of countries and society overall. What are some of the things that can be done? Odilon, I'll start with you. What about digital payments? What about Gen AI? What about other enabling technologies that could accelerate the pace?
Yeah, I talked about regulation, Carrie, and I think regulation can slow it down, but cannot stop it.
Yeah.
It's market-driven, and as Cyril said, I mean, it's cost-driven, right? The model is much more efficient overall, and you add to that also, it's much more convenient. So it can slow down, but cannot stop it. But one thing that I think is going to change it is generative AI. I told you about that. I just came from a boot camp at MIT. And I really think that as we talk about mobile first, and we talk about mobile first, now everybody understands, right? If you go 10 years ago, it was not that clear. But now everybody understands mobile first. I would launch the term generative AI first, because that's what's happening already. I don't know about you guys, but I don't Google anymore. I just go generative AI all the time. I go ChatGPT all the time. And I see my son, 25 years old, doing the same thing to get the news, to get payments, to get everything. And I think that's the next revolution coming. I think we cannot even imagine what is going to be going forward. But you fast forward, and as much as we get like farmers, right? People stopping at farming to get food, and then industrial revolution. Now you're going to have generative AI, and that's going to be the next step in evolution, I think, and will totally change the way we get digital.
I would agree. I was reading a fascinating interview with Ray Kurzweil, talking about how generative AI is going to accelerate drug development because it can replicate the cell composition so precisely of people that drugs can be developed from beginning to end without clinical trials and to market faster. I mean, it's fascinating to think about those big developments. Ruben, your thoughts?
I believe, the story focuses in these 11 markets that are highly developed. And even in these markets, you are seeing tons of opportunities for cash displacement.
Yeah.
And if you, take a look of what is happening in emerging markets, you're talking about 1.4, 1.7 billion individuals who remain underbanked or underserved. So I believe, in our case, what we're trying is to focus every effort to accelerate the adoption of digital remittances. And we're partnering with wallets and in every market and try to understand how we can, create interoperability in these wallets that today are operating in closed-loop domestic environments. We strongly believe that the digital money movement can support the inclusion of, billions of individuals who remain underserved there. And in some cases, it's not about regulation, it's about digital infrastructure.
Mm-hmm. Cyril, what are your thoughts?
I would agree with what just been said. Not much can stop it. Very limited things can actually slow it down because it is, and it has to happen. All the conditions are here, and these movements are not linear movement. They, at some point, they reach their tipping point, and then it becomes mass. And we haven't reached that mass adoption yet for all these services you mentioned. And this is going to happen no matter what. It's going to be maybe a little slower in some countries, a little faster in others, maybe some technology or some market condition, or even a pandemic can speed it up, which is what happened with COVID. Honestly, I can only see that 5 years ago, of course, I would take a typical French example. If at the bakery, the lady would ask that old client whether they would be okay to tap to pay, like with their card, so contactless payment with the card, they will be yelled at. No, it's the other way around. That same old person come to the bakery by a bad turn of event, that contactless capability doesn't work on the card terminal. It's a disaster. The bakery person got insulted. So what I'm saying, and 5 years ago, people didn't want to do medical appointment via Zoom. They do it now. So sometimes, there are stuff that accelerate, that act as a catalyst. And I can only say that COVID, for all the terrible and extremely bad impact it had also this good impact of accelerating adoption and changes and push also the cash displacement, especially in countries like Germany, for example, where cash was like 70% of all transaction before COVID, at a pace that no technology, political power, or even the people had done before. So sometimes, turn of events that were unexpected and were also create these catalyst situations.
Yeah, no, I agree. I agree with that. David, your thoughts?
Well, just to reaffirm what everyone else has said, Gen AI and AI more generally is just going to be transformative. It's unstoppable, and nothing is going to get in its way. And the world is just going to be very, very different, and in my view, a lot better over the next 5, 10, 20, 50 years as a result of it. I think that the part of the world that does raise some concerns. Cyril has been obviously very successful, and Lydia is an incredible app and so forth. But Europe, if you look at the data on the success over the last 30 years or so, and you also look at many of the major countries in Europe, including Germany and so forth, there is an overall lack of digital engagement, which isn't the Gen Zs, obviously, but it is the older set of the population. So I think there's an enormous opportunity for Europe to pull ahead. And I thought one of the most heartening things I saw from the survey is just how digitally engaged Gen Z was, not just in France, but also in Germany and the other European countries, which makes me think that Cyril is right, that this is the future generation that's going to drive entrepreneurship and growth in Europe. But right now, objectively, Europe is behind, and it really needs to catch up to other parts of the world.
I know we're
maybe the best catalyst we have is time, because these Gen Z will grow older, and the younger one will not be less digital.
Yeah, that's very true.
And then the Gen Zs will be complaining about some other useless technology, and why isn't anyone using that?
Other problems.
One final question before we wrap. I know we're running close to time. Is there one thing on your agenda? I mean, there's a whole lot of things that need to be done, can be done, should be done. But is there one thing that each of you are doing based on where you sit today in driving digital adoption forward that is your focus in 2024 and beyond? Ruben, I'll start with you.
For us, is all digital remittances. We do believe there is a huge contribution to, local economies if we are able to digitize those transactions. The majority of those transactions remain analog today, so it's a huge effort in our side to contribute in that movement.
Odolan, what about you?
I think generative AI. I think I'm diving into. I'm in the board of some public and private companies. I'm pushing like crazy. I'm pushing private equity, and I think that's going to be the new thing, and it's going to change the world for better, as it was said by David. And I would say two things. And the other thing is, I think the cross remittances, cross money movement, cross country money movement is ready for disruption. When the central banks start to settle with the central banks, and end all this corresponding banking nightmare that we had for like the last 100 years, that will change. And I'm already like hearing that directly from central banks. So it's going to start on a corridor basis. It's going to change the world also of cross-border.
Interoperability is really important in those domestic schemes. Cyril, what about you?
Pretty much same. We're trying to bring down all these old belief that banks should be like this or banks should be like that. We just launched our new brand, Sumeria, for banking services. It's a free account with a nice and free card, no fees abroad, and interest income paid on deposit on checking accounts. We believe it's going to change the dynamics here, and it will move the market towards a much better client-friendly environment. On the other end, we're looking very closely with the Lydia side of our business to all the initiative of networks between wallets.
Yeah.
As of course, the capability of moving money instantly across the globe without all these correspondent thing, which honestly costs a ton and is so inefficient.
It's slow, yeah.
Yeah, I mean, so it's happening at the moment, and we engage on both of these fronts and with very active initiative, because we believe in a world where your bank is a partner to make your life simpler, and you pay for that service. Whether today it's, I mean, I hate to say that, but the relationship between customers of banks and banks is basically a Stockholm syndrome. I mean, and that must stop. Interesting.
David, you have the last word.
So, you guys are all doers. So, to paraphrase a saying, those who can't do, write a lot. So that's what I do. One of the things that I guess I'm trying to do is, there's a tendency on the part of policymakers to look at the bad side of digital, and you're seeing this now with AI. And in a lot of cases, they're right. I mean, there are bad things, and we require regulation. It's very important that we all kind of pull back and focus on the fact that, yes, there's bad stuff. Yes, there's a need for regulation, but all this is just wonderful stuff that's going on. Gen AI is going to be something that is going to make people so much better off. It's not gonna kill jobs. There's just going to be, so much value created. You just have to look at healthcare to see the tremendous opportunities to extend lives, to improve lives, going forward in time. And people just need to be reminded how wonderful this stuff is. And there's a tendency to focus a little bit too much on the negative, and being the opposite of what I said about being a dismal scientist. I'm trying to look at the bright side of this and be an evangelist for this area.
Well, listen, thanks so much to all of you for a fascinating conversation. The big takeaway is digital adoption cannot be stopped. It is unstoppable. And there are a lot of innovations and innovators who are hard at work making sure that it does, in fact, happen across generations, across use cases, for the ones we see today and the ones yet to be developed. Thanks again for your time. I really enjoyed the conversation. Bye-bye now.
Thank you, everyone.
Thank you.
Bye-bye, everyone.
Thank you.
Bye. Bye.